So last week we looked at some very practical mismatches between historical markets and what was happening with disruptions in the energy markets. This week we want to maybe make the connection between some of those things in our equity markets. So in a second here on the screen, what you'll see are crossings through the Strait of Hormuz. So this, in blue here is not an unfamiliar picture to most of you. Really fell off to close to zero outside of the conflict in late February. We've layered a couple of interesting points on here. There's all sorts of prediction markets out there now. So one that Bloomberg provides for us is Polymarket. So in white, you see the Polymarket odds that traffic goes back through the strait at normal between now and the end of April, being that that's just a few days away. It's virtually zero at this point. So that makes sense. But green is the end of May. So a little over a month away. We're still seeing lower than even odds that the strait is functioning normally again at that point. What's interesting about that is a completely different picture than you see in the U.S. equity markets in particular. So we had the S&P last week make two new highs, including one on Friday. We saw Nasdaq do the same, two new highs, one on Friday. And even the Russell 2000 small cap stocks making a new high on Monday. So markets really are just ignoring any of the potential disruption and economic consequence of this, at least here in the US. You're seeing more impact in Europe, and it honestly makes sense because it's more disruptive for them from an energy standpoint. But even still, not huge impacts that we're seeing yet. And this is just worth pointing out. So if there is any sort of resumption in hostilities, if we don't get resolution from the talks, the news goes back and forth day to day, are our markets at risk because they're priced to the best possible news? Could even individual earnings reports. We've seen a few companies that missed or disappointed. Their stock got wrecked. It really hasn't changed sentiment yet. Could that begin to sour? Or lastly, do we finally start to see the economic impacts of some of these higher energy prices that are up 60, 70, 80% since the beginning of the year? So are they going to bite in consumer spending or business plans or overall sentiment? So those are the things we're looking for. And we've talked about those before, but the longer this disruption happens with the strait and the longer that it constrains the energy supply for a good part of the world, it's worth watching, and it's worth just being aware of the markets and where they're pricing in that risk or not at this point. So thanks for your time today.